Welcome everybody to Volatility Trading Strategies. Now, if you are new to my work, the name is a dead giveaway. I do specialize in trading volatility as an asset class of its own. So that includes options trading, stocks, bonds, gold rotation strategy using volatility metrics to guide those trade decisions, and also a healthy dose of trading the volatility exchange traded products such as SVXY, VXX, UVXY, ZIV, and this video is specific to those volatility products. And I want to highlight one small change that I'm making to my strategies as we move forward into 2019. So let me share with you what that is. So a little background story here. Many years ago, I retired from professional golf and began trading full-time for a living. And the vast majority of my trading that first 5 or 6 years was options trading, derivatives. I'm not an abstract creative person at all. I can't paint, I can't sing, I don't play any musical instruments, I don't understand Shakespeare. I have an analytical mind, and with my background in math and statistics, options trading just grabbed me right away, and I've been hooked ever since, going on 15 years now. But in 2010, I added a new subset to my arsenal beyond options when I started trading VXX. This here is the first month I started seriously trading VXX with some type of structure. August 2010. I was buying, shorting, just trying to figure this product out, but I was definitely hooked. Still to this day, it's a very unique product, and I knew that as soon as I saw it back then. So after about a year or so, I had the foundation for my current volatility strategies. This was back before products like the XIV and the SVXY even existed. Very low volume, hardly any articles anywhere. It was virtually unknown for many years. It wasn't until about 2016 that the general public became interested in these volatility products. Only when the potential was undeniable were they on board. No problem, it's never too late, but I've been in the trenches with this stuff for many years now. It's certainly not new to me. But like any successful person in pretty much any walk of life, adapting to change is part of the process. And in the investing world, things do change constantly. Markets and the economy go through different cycles, ups and downs, ebb and flow, and the ones who are successful in the long run are those that can adapt. But therein lies the rub, because there's a very fine line between adapting to the markets and just overfitting and changing things around really quickly. Too many traders out there are quick to change things around every time something doesn't go as planned. So I have a very simple rule that has served me really well over the last 15 years. I only allow myself a once annual window to review a strategy, and if necessary, make a few adjustments in preparation for the following year. So I've done my annual review now of all my volatility strategies, and I will be making one small change in 2019 for all 3 of them. So if you are new here, because different investors have different levels of risk tolerance, I do offer 3 volatility strategies. VTS Conservative Vol and VTS Aggressive Vol are as the name implies, for investors with either more aggressive or more conservative goals. And the VTS Tactical Volatility lands in the middle. For today though, I will use what I call the VTS Combined Volatility, which is just all 3 strategies given an equal 1/3 weighting. Every year, at the end of the year, I do a full review of the trades from the previous year. I analyze the areas it did well, and also where it didn't. No strategy, no matter how good it is, can do well in every single market environment. So identifying areas that can be improved upon is vital. And I also do a full forward-looking macroeconomic analysis annually as well. Now that's not for the small minutiae, normal political back and forth, that stuff is just noise. I'm only looking at major developments that may affect markets going forward. This annual audit process is one of the things that's contributed to my success for so many years. It's been a very long bull market since the financial crisis of 2008. We're essentially tied for the longest ever now. Now sure, there were a few scares along the way, but for the most part it has just been a steady 10-year climb. But in my opinion, we're now at a point where the headwinds facing the market are starting to outnumber the tailwinds. The years of quantitative easing are over now, at least for now, and quantitative tightening is well underway. There's more gridlock in Washington, more political uncertainty now than I can ever remember. And many countries, including the United States, are amassing ever more debt. I'm not bullish or bearish. I'm a person who focuses on the math and the quantifiable signals that are in front of me. Having said that, though, things aren't looking too great right now, and any gains that this market can eke out going forward are going to have to come from actual growth. So let me explain the small adjustment I've made. All three volatility strategies have both short and long volatility positions, as well as a healthy dose of cash positions in the middle when signals are ambiguous. But since we've been in a very long bull market, the short volatility side of things has been the major driver of the gains. In fact, short volatility trades have occurred on about 50% of trading days, whereas long volatility trades have only occurred on about 3% of trading days. And of course, cash is the remaining 47% for safety positions when signals are ambiguous. Going forward, though, I will be loosening up the thresholds on that long volatility side of things to potentially allow a few more of those trades. We may or may not be heading towards a recession. Only time will tell on that one. And honestly, I'm not going to spend any time trying to predict or guess when that's going to happen. But I think the days of multi-year run-ups with very small pullbacks is probably behind us, at least for this cycle. I'm expecting a higher volatility regime going forward and a little bit more inconsistency. However, and I can't stress this enough, long volatility is a notoriously difficult trade to manage. It's not that difficult to have signals that pick up on market crashes and profit from those declines. But it's very difficult to hang on to those gains because at some point, if it's not an actual recession, the markets are going to bounce, and that give back can be painful. Here's a rough example. What you're looking at is a very simple backtest of a strategy that goes long volatility, which is to say long the VXX, when the front month M1, M2 VIX futures are in backwardation. Now obviously this is far too simplistic a strategy, so I'm not suggesting anybody actually do this. But just as a basic example, if a trader were to go long VXX when the VIX futures were in backwardation, this is what those results were in 2018. As you can see, it's very easy to pick up on the volatility spikes and make a nice profit. But at some point, unless it's an actual recession, which we haven't seen yet, the markets will bounce. And this is when the give back occurs. So it's a very difficult trade, because the signals that allow a trader to get in and profit from those volatility spikes are the very same signals that keep them in the trade, and then they end up bleeding some of those away. That's the give back. Now you might be thinking, well, 0% backwardation is far too relaxed a signal, and I agree completely. Like I said, there are many more sophisticated ways to go about trading volatility, so these are not recommendations. But just to illustrate, this is the same strategy using -3% backwardation instead, which does trigger a little less often, and it also exits the trade a little bit quicker on the other side. But again, we see the same problem. It's very easy to make the profit, but a lot harder to hang on to it. So for me personally, going back all the way to 2010 when I started trading these products, I've always been quite conservative on that long volatility side of things. Only during the longer 4 or 5 month long sell-offs was I really focused on long volatility. Now, it did allow me to profit during a few of those crashes, but I have to use it sparingly. The European debt crisis, the 2015 crash that lasted 6 months, things like that. But the change that I'm making this year will allow me to take a few more of these trades. But just because this bull market is getting a little long in the teeth doesn't mean that this trade is going to be any easier going forward than it has been in the past. We still have to do it conservatively. Instead of having full positions all the time, I've devised a way to scale the allocations. So I will be taking half-size positions on some occasions when the volatility metrics warrant it. So for members of the VTS community that see my trades every single morning, I will make it very clear from this point on when it's meant to be a half-size position. The VTS indicator pictures that I use to illustrate the daily trades, like all of these, they will show half allocation sizes when applicable. And the description below it inside the daily email will also make that very clear, so there won't be any confusion. So assuming that a strategy has good performance over a long period of time, it's very important to only be making small changes to anything year by year. As they say, if it ain't broke, don't fix it. So for me, I've been trading these products successfully for almost 10 years now. Double-digit return, very low drawdowns. So my annual audits don't actually require material changes to any of the strategies. Just small tweaks here and there, and this year, that's what I've come up with. Expect a slightly higher frequency of long volatility trades in the years going forward. but sometimes I will be taking those with half allocation sizes just to smooth out the results a little bit. So if you are new to the volatility space and do need a little bit of education and guidance, feel free to join the VTS community. I do offer free trials, so you can sign up for that on my website, risk-free, and please feel free to ask me as many questions as you have. Ask me 10 questions, I don't care. I'm always here to help anybody who's looking for better investment performance. Thanks for watching. So go ahead and click the link right here, sign up for the VTS newsletter, and when you do, you're going to get full access to all of my trading strategies for a full month absolutely free. And if you are new here, please consider subscribing to my channel. Also, if you have any questions or comments, I'd love to hear from you. So go ahead and leave those in the comment section below. See you next time.